Jim, market update. Has gold finally topped? Is it also over? Is everything going to zero now? I'm going to talk about that in this video. This is an update on the video I made like a week ago, where I was basically talking about why is everybody buying gold at all-time highs. And the funny thing about the video was that it was quite literally the pico top of gold. I was basically talking about how people in Vietnam and Australia, they're lining up in real life, hundreds of people outside these tiny stores just to buy some gold at all-time highs. And when you see retail, so these are these smart investors where people are really lining up, waiting hours to buy gold when it's at 4,300 an ounce. And some people there in Vietnam are literally buying it at a 50% premium because there's just so much demand for gold. But like these stores are running out of gold to sell to people. They're just like, yo, okay, if you want this gold, we're going to put a 50% markup on that. So they're getting a 50% more expensive gold, which is crazy for an asset as big as gold. And they're buying at all-time highs. And basically, long story short, that was the top of gold for now. That doesn't mean it's the top for the whole gold market, like cycle-wise. But for now, it is. Right now, gold is like, what, 4,100 or something per ounce. It's almost at I think it was like a 9% pullback. I think it's bouncing a little bit right now. But basically, it had a pretty nasty red candle after an up-only rally for a couple months, or I guess even a few years. And now we can say that gold has officially topped for now. And we know in markets that markets move from trending to consolidation to trending. So it's not going to go straight up only like that in years. And then now it's going back to like, I don't know, 1,700 per gold now. That's where it's going to go. It's going to do a straight line down there. It's going to do a V-shaped reversal. That's not how markets work, at least in most cases. In small, rare cases like meme coins and whatnot, yes, that happens because it's pump and dump. But in large assets like gold, trillions of dollars of market cap, they follow more textbook patterns. So gold right now, it is currently at a complacency rejection from the top, and right around here is actually when it would bounce from its daily bands, from its 1221 bands, and actually enter a lower high. And that lower high is going to tell you everything you need to know if this is actually the top or not. If it actually paints a new high on the bounce, then gold will have a blow off top. Maybe it'll go to like $5,000 per ounce or something, and that's actually the top. But it's pretty high chance that gold is top for now because of that qualitative top signal that everybody's buying it. Peter Schiff is like nowhere to be found. All the gold bugs are coping on Twitter saying, oh, gold, this is just a cool off before the rally and whatnot. No, for now, it is probably topped, and there's most likely going to be some sort of complacency bounce because all the bears that are shorter from the top, they're all celebrating. All the bulls who bought at the top, they're like, what the heck? They're going to try to buy. They're waiting for the new bounce, and then you say, haha, now the bounce is back. I told you so. And then the bears are like, oh, shoot, should I close my position? And then that's when the market would actually finally start going down for gold. And I don't know, we'll have to see. Tops take time to form for up-only rallies like that. And I more bias for gold enter more of a very lengthy month distributive pattern. And it's probably going to trade like, I don't know, mid 3,000 to 4,000 for a really long time. And I don't know, we'll have to see what happens. I don't know the future, but for now, gold is topped. And I want to talk about in this video about other markets, about crypto stocks. Just give my own brief update from it from the perspective of a systematic trader, and also give a lesson on like markets in general on what not to do and what to do. Because quite clearly the gold buyers who lined up to buy gold at 4,300 per ounce are quite sad that they're down 10% on their positions already in like a day on a multi-trillion-dollar asset. So 10% is a lot of money. That's like almost the whole market cap of Bitcoin that just went down in one day. But I want to talk about that. But first of all, I'll say that at the end of the video. Right now, I want to talk about other markets. So let's look at stocks as well. So we know stocks has the biggest market rally. So I'm not an expert on stocks, by the way. I'm just going to say it from a broader macro perspective, and also just give my own comments on it. Where stocks, it is represented by the S&P 500, the Standard & Poor's 500, which is an index of the 500 stocks in the world. All of the financial gurus, they tell you to put your 401k in S&P 500 because that will make you rich or something. Spoiler alert, it won't. S&P 500, its true objective utility case is for rich people to use it as smart borrowing, because you can basically borrow cash and use your stocks as collateral. And we know stocks are too big to fail, so they'll keep going up forever basically. And they basically are able to have liquid cash, people like rich people with stocks, and they can use that liquid cash to buy stuff, and their stocks as their collateral will go up over time. So their interest rate is basically paid off by the gains of the stock. So it's basically free money for rich people. For average people with like less than 7-figure portfolios, less than 8-figure portfolios, S&P 500 is, a lot of people are sold that's going to get them rich, but it's not. It's the gains for S&P 500 are no longer as exponential as they used to be anymore. And if you were going to use the S&P 500 for anything, you would use it as a hedge in your portfolio against fiat debasement. You use it just to keep your head above water for inflation for the US dollar. That's the whole reason why you would buy S&P 500. But then at that case, you're not really making money with it. You're just basically having stagnant money. Like, it's better than holding cash, but it's just stagnant money, like over the long term. So you want, like, if you play markets, people want to play markets to make money, right? That's what most people expect from it. They think it's like some sort of casino. They go in and they put it all on black and they get 100% returns on their money in a day, which is why that mindset is why most people go broke doing markets, and they're so confused by this mystery. But no, stocks, that is a quick rant for that. But there are, right now in the stock narrative, it is very driven by AI as a narrative. So we know that in stocks, the main leader is NVIDIA, where NVIDIA, they create GPUs. And the thesis is that if you buy NVIDIA, they're basically the shovel to the gold mine, the AI gold rush. And you need GPUs to create all these models and fund AI projects, and you do, right? So NVIDIA stock went pretty much crazily. I think it's like the only stock that competed with Bitcoin in the last couple of years or so in terms of absolute returns, and it is absolutely insane. But right now, price-wise, NVIDIA is losing momentum after its really long uptrend, and this is not meaning that it's topped. It's a sign for topping, but it doesn't mean it's topped. You have to wait for market structure to confirm that. But qualitatively, we know AI is a narrative. It is, like, I've talked about AI many times in these videos before, where I gave my thoughts on it, where I think AI might take longer to replace people than people might think. Because you see all the AI gurus up there saying AI is going to replace people by 2030, 2027. And fundamentally, I'm not like a super AI researcher or anything. I'm not deep into the AI weeds, so I can't say it from the actual qualitative or quantitative perspective. But we know that in markets and in narratives overall, this is just from trader logic, where usually when everybody expects something to be the case, markets usually do the other thing. And right now, AI, it is a huge narrative. Everybody knows about AI. Everybody is pretty much part of the whole mind share for it. Even your grandma is worried she's going to be replaced by AI and she's not even working. Like, AI, it is pretty much a buzzword that is in everyone's psyche. Everybody's pretty much expecting it's going to replace them, and AI is going to come in and make everything so much better. I'm not really sure what else. And everything about AI is just AI this, AI that. You say AI startups being made everywhere. You see every software and program integrating AI tools, and you see all these AI everything, and VCs are just throwing money left and right on AI. What does this sound like? It sounds like a bubble. And stock wise, of course, you wait for price to wait to basically do that. And it's not like S&P 500 is equivalent to the AI. It's not. It's also based off many other sectors. Like, what's great about stocks is that there's so many different industries that all of these different industries aren't correlated with each other. Crypto is extremely correlated. So if you want Ethereum to go up, you most likely want Bitcoin to go up. So it's like they're very correlated in crypto, but in stocks, since it's such a large sector, all of these sectors are pretty much independent of each other almost. So it's not like if AI tops here, that S&P 500 goes down. No, it's an index of the top 500 companies, right? So it might have a dip, but there's all these other companies that are holding their weights, right? So AI as a narrative is qualitatively showing top signals. Like, everybody's expecting it. And I don't know, my only comments on it, will AIGI come by 2027? Will AI kill everyone? I don't freaking know. From a biblical lens, from a Christian lens, so I talk about like religion stuff in these other videos as well. Basically, AI in the Bible is has a lot of analysis and is tied to the mark of the beast, because there is like this country called AI, and AI, it's essentially like, I'm trying to remember exactly. I watched this one video about it. He explained it way better. I'll link in the description of this video if I remember. But he was basically talking about AI, giving a very compelling argument for why is the mark of the beast. And AI is probably one of the largest existential threats to human in the recent years that could actually shut off everyone. Like, there was this paper called what an AI extinction race looks like by 2027 or something. I forgot what the actual title was called. There's a bunch of videos covering it. I watched like many of them, and it's a very compelling argument where basically AI will come in and there will be the global AI arms race between US and China, and then there will eventually be this existential question: should we continue to develop AI and not think about the safety because China will get to it first, or do we focus on the safety and worry that China might basically be a competitor? Like, that's the basic dilemma here, and it is a very real problem in terms of the US global powers between US and China, right? So it is very, very real, and one of the catastrophic risks for that is that humanity will scale AI too much, and AI will get too smart for us and basically psyop itself outside of the system, and then it's going to create like a biovirus that wipes out humans, and humans will no longer need to exist because AI's sole purpose is to optimize systems. It has no regard for human emotionality or any sort of empathy. So humans will be eventually wiped out because AI wants to optimize system, like conquer other solar systems or make systems more efficient. Humans aren't needed because they're just useless eaters at that point if AI commoditizes labor. That's the basic utility case for it. It's a very compelling argument. I'm trying to think of like reasons for why it's not like that. My only reason, like logical basis, that rejects that idea is the contrarian take that everybody already expects that. But of course, like correlation is not causation, right? So it's hard to really say. Maybe it will be, maybe it's not, I don't know. But AI as a narrative for stocks is basically, maybe it's topping, and I don't know. Does this mean that stocks are topped and that's over? I'm not really sure. If you're going to buy S&P 500 and whatnot, you're doing it for the long term. You're doing it to protect your money against inflation. That's the whole point that you buy it. So you should know and understand that. Or you're a super rich person and you're using it for smart debt. But I'm not really sure, honestly. You kind of just wait for price to confirm that. I just want to say that there are top signals for that. But I also want to talk about, so I'm going to tie this back into stocks, but now going into crypto. So crypto right now is Bitcoin. Bitcoin is pretty much the face of crypto, but Bitcoin and crypto are honestly two different things. Like, there's Bitcoin and then altcoins, which are ETH, Solana, and pretty much everything else. And we know altcoins are cooked after the liquidation cycle. I'm going to look at some of the charts, look at SUI, look at Hyperliquid, ETH and Solana look fine for now, but they're basically going to mean revert, while BTC is the only trending asset in crypto. And the main reason of altcoins, why it's bad, is because there's too many of them. It's too much dilution. So there's not enough capital to go around in crypto, since crypto is a very illiquid market compared to like stocks and whatnot. But basically also cooked, but Bitcoin is probably going to be the only one that is going to continue to do well. And I want to talk about, is crypto topped? So I said in the last video or so that crypto, I think Bitcoin is going to enter a bear market soon. And I made that video like a few weeks ago. Right now, Bitcoin's actually up from that. And I was saying that more from the perspective of, in a midterm perspective, because my thesis being that it is a 4-year cycle where basically markets in Bitcoin will go up for 3 years and then down into last year, the 4th year. And this is based off the halving cycle, where the amount of Bitcoins that you can mine, every successful Bitcoin mining gets halved every 4 years. So there's some weird correlation of that for why Bitcoin has to go up and down. But that's how it was for the entirety of Bitcoin's price history. And that 4-year cycle thesis reigns true until now. And currently we are entering that 4th year of 2025. So we have to see if it closes red or not. We're just going to have to see. Maybe the last Q4 months are going to end red and we're going to enter bear market. I don't really know. But in terms of Bitcoin, we have to know that Bitcoin has been going up only for many, many years now, for like 3-4 years. There's a lot of people who are on profits in it. People are up 8x on it. And we also starting to see people starting to accept it as a new thing and whatnot. I mean, it's not like at a global level that it's widely adopted and is basically the no-brainer asset to invest into, like people do with S&P. It's not there yet, but we have to also understand that there's a lot of people who are up in profits, and Bitcoin is currently chart-wise in a distributive chart market structure, where distribution is basically a form of consolidation that happens after uptrends, and it's basically when bulls are unable to keep the price higher and the overwhelming selling pressure of the bears are making it eventually roll over, and Bitcoin will enter some sort of a bear market. And bear market just mean that it just goes in a sustained downtrend. That's what bear market is. Bear markets are also fractal, so you could say every downtrend is a bear market by some means, but like by an overall large bear market where Bitcoin, instead of going up like how it's been for the last few years, will basically go down for a couple of months. And when you see this, altcoins are going to get absolutely destroyed. It's absolutely over for altcoins, and altcoins most likely aren't coming back as a consensus. Altcoins can have bear market rallies while they're going down, and bear market rallies are actually where you make the most returns. But as a whole, for investments, altcoins are cooked. So if you have altcoins in your portfolio, I would look at them from the perspective of trading them instead of investing in them. But after they run out of juice and people realize that altcoins are cooked, like everybody has a consensus, because people are still coping that alt season is still a thing and whatnot. Once people realize that, then most likely the better approach is to like trade Bitcoin and then stocks, because stocks is kind of like, there's so many different sectors. So it's like kind of like altcoins, but they're not correlated and it's a lot more liquid. So I don't know, it's probably better to learn that. But in terms of crypto, there are more reasons why it would go down than up in the short term. And that's not to say that crypto won't go up and it doesn't go to 1 million or a couple 100,000. I still think it does, because crypto, Bitcoin, it is an adoption curve play. It's not a digital store value is gold, I would argue, because gold is the only true store value. Like the Bitcoiners argue, because Bitcoin has 21 million Bitcoins that are only able to be mined and is truly limited supply, then that is the real use case for it. And that is true. That is a very compelling argument. But we have to understand that the alpha play here is gold. And, you know, you could argue that Bitcoin could eventually take over some of gold's market share and whatnot, and they could be equal. I'm not really sure. That could happen. In that case, I'll be wrong. But Bitcoin, it is more, you would invest to it to front run other people instead of thinking it's the thing that's going to save you from fiat debasement and whatnot. That's what I want to say as the lesson in this video for Bitcoin. But I also want to talk about with Bitcoin and crypto, where Bitcoin, it is currently at its range lows at like 110,000 as I'm recording this video. And we also understand that the market is extremely fearful. I'm seeing like on Twitter and whatnot, and a lot of people getting really bearish at the range lows after a false breakout. So it failed to break below the market structure and actually go to 93,000, which was, I think, would be Pico bottom. But I mean, if the bull market thesis holds true, if it's not Pico bottom, then Bitcoin will probably go lower. I don't know, 70, 80,000. I don't know where it would go, but it would go lower than 93,000 as the final bull market support, which is basically the 50-week EMA. And basically with Bitcoin, a lot of people are fearful. That is what the fear of market greed index says. And when I see that people are very scared, that's when you as an investor should get very greedy and very confident and excited and buy all the blood, right? Because right now altcoins are undoubtedly cooked. There's a lot of altcoins that are just sitting at the bare bottoms, and I would say right now is probably decent time to pick up altcoins for like a little bit of a little swing trade for a few weeks or something, and then see Bitcoin. I think Bitcoin could top like 116,000 for Bitcoin or something. I'm not sure where exactly. We're just gonna have to see. But currently the market, it is very fearful at the lows, which is usually a bottom qualitative sign. So I want to say that for also stocks with this fear indicator, where stocks is like 1% below its all-time highs, and yet people are super fearful and think everything is topped and whatnot. And yes, we do have qualitative signs that maybe stocks are topping. We also see gold is topping, so people are seeing gold is topping and they're getting scared, and then they're seeing Bitcoin is doing distributed chart pattern. Oh my gosh, like this is starting to become consensus. And I was saying that market is bearish, undoubtedly, like market structure, or it's not bearish, but they're showing signs that it could become bearish. Right now, all markets are bullish, but people are starting to get very scared, even though market structure is bullish, which usually suggests lower high potential So I'm thinking that for markets overall, like stocks, Bitcoin, I don't know about gold. Gold probably maybe have a complacency bounce. Maybe it's going to have a blow off top bounce. I don't really know. I'm thinking like markets short term probably have some sort of a short term bounce. And if you wanted to play that, then you can go ahead and whatnot. And I will say that that's what it is. Mid long term though, like I don't know, maybe 2026 we're going to see some weird stuff and markets are going to enter some sort of mini bear market. I'm not really sure, but I just wanted to say that from my perspective of what I see in the markets right now, and that's how currently I'm positioned. Like me personally, for markets in terms of spot positions, I am mostly cash, and then I'm trading the intraday moves for Bitcoin and whatnot. And in terms of like, I have like a little like some altcoins that I won't say, because I don't want to be that type of person to show like, oh, you should buy it. No. I have like, it's very small percentage though. So like I have very good risk management for it. So if the thesis doesn't work, then whatever. But the risk reward on it is so good right now that I'm taking the bet to do that. But that's what I'm saying for me personally, what I think about markets. I'm mainly in crypto, not in stocks yet. I'll be looking into stocks probably couple months later if Bitcoin enters some sort of a bear market and then altcoins are no longer tradable. Then yeah, it's probably time for me to look at stocks, because altcoins are absolutely cooked. It's over for altcoins. Everything else besides Bitcoin is over. I mean, Ethereum could have a rally. It could be like the Amazon or something, but I mean, even maybe Solana, but Solana is also cooked too. It failed to break above its highs like 10 times now, and pretty much every other altcoin, Sui, Hyperliquid, ADA, XRP, everything's over. It's over. They're over. It's just straight up over. That's what I want to say. And I want to say at the last part of this video about my final lesson for markets and how to actually win in them, and how to not lose your money, how to not be that statistic, the 90% of people who lose money. And I want to say that markets, the only two type of people who live in these and win are, one, long-term investors, and two, systematic traders. And you can say that these things overlap, because you could also be a long-term investor and a systematic trader. But I will say that most people for markets, you look at them as a perspective of putting your extra money into buying assets that appreciate over time, and you dollar cost average them, I don't know, every week, every month. You put a percentage of your money that you don't need for your living costs, and you basically save it for the future, instead of having like a savings account or emergency fund or whatnot. Like emergency fund, I mean, yeah, you can argue that maybe you need it or not, but it's kind of just dependent on what's your own risk tolerance. But your savings and where your money should go goes into assets. And I think it's Bitcoin. That's the best one, risk reward wise. If it's not Bitcoin, well, what's your alternative? Are you going to buy S&P, which barely performs dollar inflation? Or are you going to buy gold, which is pretty much having a blow off top rally, and now it's most likely entering some sort of a bear market? And what else are you going to buy? Forex, commodities, which don't have as much returns as Bitcoin. I don't know what else is your alternative if you aren't super rich and you need to look at markets as a way for you to, I don't know, quote unquote, escape the matrix. The only option is Bitcoin. I think it's the best option. You could become a stock person and try to play that too, but Bitcoin is probably, in terms of long-term investments, like next 5-10 years, probably best chance. And then you learn how to like the trade and whatnot. But trading is a very hard game, and I don't really recommend it for like from this perspective, because this channel is not a trading channel. It's just a channel on me yapping about stuff in my life, and I just really want to talk about them. So I'm not gonna make videos on this channel on how to trade and whatnot, how to become a trader. But I'm just saying that for markets, the only way you win are long-term thinking, long-term investing, or become a systematic trader, or more like. And from that perspective, for most people, when it comes to markets, you don't want to be the gambler. You have to have risk management overall, and you have to put a certain amount of your money owning some assets. Like, you don't put all of your money in assets, especially now when everything is showing top signals. Even if there's going to be some sort of a local top here and markets go down by like 30-40% or something, you still want to be exposed for it, because it's like that psychological limit on it. And there's also the chance that it's not actually the top and there actually is another leg for it. So you want to be exposed for both sides of the spectrum, and you have to think about it from the huge 5 to 10 next year curve instead of the short-term thinking. And just this type of mindset, I love to talk about this in other videos, and just like I love talking about like mindset and whatnot. I keep talking about compounding, long-term thinking, and risk management, and basically emotional control, like all of these very guru type things. But in markets especially, they're extremely important. You have to, one, overall think about compounding and long-term thinking, and you have to stick to one strategy, one skill for years at a time, and that's the only way you can have some sort of wonderful success, and you can have financial money to basically help other people. And it's the same thing for cash flow and investing, whatever the heck. It's the same concept. And that's just the final lesson I want to say in this video, this very long yap about markets and overall. And I just wanted to talk about that, where you have to own assets. You have to basically be an asset owner. You have to dollar cost your money into assets. That's the only way you win for most people that I recommend. This is very guru advice, by the way. There's what all the gurus say, and I agree with them. And you don't want to be the type of person trying to think that markets are a place where you can turn $1,000 to $1 million. That's not a market. That is a casino. That is gambling. And we know in gambling, you're more likely to lose than win. Same thing in markets. So heed that with a lot of caution. Risk management is the only way. And yeah, that's what I was saying in this video. Just a brief market update. I guess not brief. This video is like almost 30 minutes long. But I really just wanted to talk about that because I think a lot of people have some uncertainty in markets right now. They're really scared. And I understand markets are extremely difficult to navigate for especially new people who don't know anything about them. And I was completely in that boat before, but like I've autistically studied markets and economics for the last 2 years. And like literally like many hours a day, I autistically studied chart, autistically learned about macroeconomics, and autistically learned how all of this ties in together. And I don't know, I just really love talking about it. I just love talking about it. And it's a really wonderful skill to have, because markets and trading is a lifelong skill, and it's a very lucrative skill. If you learn how to trade, learn how to navigate yourself through markets, learn how to be exposed, learn when to not be exposed, and learning about your own psychology and how other people's psychology and the herd mind share. It's a very lucrative skill. You can make lots of money doing it. It's probably a skill that I recommend that a lot of people learn how to do, like trading and investing, because it stacks on your cash flow. It basically multiplies the amount of money you make when you have this skill, and it's very independent of time. So the more money you have, the more money you make. It's that type of thing. So it's a very exponential thing. It's a very compounding thing. And I just think it's so wonderful. I love math. I'm an engineer. I love how numbers work. I love looking at data. So like all of this stuff, it's very pleasing to my brain. So I just love talking about it. I would love to talk more about these topics. And I don't care if like people watch it or not, and think I'm stupid or whatnot, and they think, oh, you're just a yapper, whatever, man. Okay, like, and I'll also say that I don't predict the future. I don't know what the future entails. That's actually the most important trait if you're going to play markets. You can't pretend to know where everything is going with 100% certainty. You have to look at things from a probabilistic outcome range. That, oh, well, in case it's bullish, it goes like this. In case it's bearish, it goes like this. You always have to consider every single outcome, and then you allocate based off the probabilities of whatever is going your way, and that's how you win long term. But yeah, that's pretty much all I'm saying in this video. Pretty long yap, and I'll see you guys.